All right, so today's today we're pretty much going to get into um, understanding internal and external ranges in correlation with our fibs. For the people that are in OCR, um, you understand the fibs, and if you want to get into the fibs, if you're not in OCR, just look at the link in bio. So first things first that we got to understand that we got to get into is understanding market direction. Okay, Rich, you can hear me, right?
Yes.
All right,
Can,
cool.
can you hear me?
Yeah, I hear you. All right,
All right.
so first things first that you want to make sure is that we see that the direction is bearish and we see the shift and see the direction is bullish, right?
Right.
We want to identify the overall range of this itself. What is the range? Okay. So what I like to do is I like to mark up my major price action levels on the 11 hour. Damn, it's not gonna let me. I gotta pay for it. I'm not paying for it. 4 hour.
The 4 hour. All right.
Yeah, I usually like to do the 11 hour. I just gotta renew my trading view.
Why
Um,
11 hour? Because 11 is like
or
not typical.
you can do it. You can do it on a 4 hour too. Though it's still effective. So
No,
the first thing,
maybe from your perspective, there's something there. I don't know.
what do you mean? It
Or it doesn't matter.
doesn't really matter, but from my perspective, I like it. But it doesn't really
Mhm.
matter. Sometimes some people like four, some people like 11. That's all.
Yeah.
So
I thought maybe you see on the 11 hour something different or something
nah,
specific.
nothing different, nothing specific. It's still good. We're gonna do it on 4 hour.
The 4 hour. Okay.
All right. So let's in the market direction. We see the price is bullish and we see that price is bearish down here. We
Yes.
want to identify where the shift happened. Where is that? Right here. Boom.
This big. Yeah.
Make this black and let's go ahead and make it bigger. Boom. Price shifted in this area. So now, after understanding price shifted in this area, you want to see has price shifted anywhere else in that area? Yes, it did. This is just an example. It might not always be like this. It might just only be one. But we're looking at the shift, okay? Now,
Mm-hmm.
from this shift, we got to identify what are our major points of interest? Like, what is major? What is major here? First things first, we can identify that there's support levels here. I'm like marking out my levels crazy perfect. To me, it doesn't really matter.
Mm-hmm.
We have support levels here, and then from there, we have a lot of levels here where price also rejected previously in the past. Boom.
Right.
Price was rejecting here. So we know that this is a pivotal area, right? So now understanding that these are two pivotal areas, you can anticipate for price to tap inside those areas when it comes to this region. Am I able to do replay? I gotta renew my stuff if it doesn't let me. No, I just want to go to dollar.
But the levels you just draw, right? The how do you say it? The breakup line, those two levels.
Yeah. Uh-huh.
How far are you drawing it? This, I mean, from where to where?
Honestly,
And
I'm
does
only
it matter?
drawn solar pit, so I'm gonna tell you. I got you. So when it comes to the ranges, you just want to find something. If there is something behind you or above you that also represents the same level where price stopped, just mark it
Mm-hmm.
out. It doesn't really matter how far you go. So like even if I was just right here, right, and I didn't go that far, that's the thing. With the way I mark out price, because this is just price action. This is not going to put us in a good or bad situation because we already have our fibs. This is just to help us understand the overall direction of what price is going. So even if this wasn't right here,
Mm-hmm.
I would just draw it out like this. Make it bigger. I would just
Yeah.
draw it out like this. Just be
Yeah.
like, okay, bet that's a pivotal zone. Then all
From
right,
this
bet.
point,
Like this, that's
from this point, it's like for me because you put it on a wick, you know. So for me, is that it looks like that's more precise than just
what you
drawing the
mean.
line, you know.
What you mean?
You just put the line there, right?
Huh?
And you just put it. You started at the wick.
Yeah.
Yeah, but if you didn't do that, you just mark out and maybe the line will be below the wick, you know?
What you
But
mean? So the line will be below the wick down
yeah,
here,
yeah, yeah. If you don't use this, if you don't use the line, just mark out the region.
like this?
Yeah, but only if you use the box. If you use the box.
Oh, okay, yeah.
Yeah,
The reason I like to use both is because line represents exactly where price stopped.
yeah.
The box represents exactly the range of that wick. You might be wondering, why did I use this wick? Why did I pick this wick? The reason I picked this wick is because this is the last level that was responsible before the shift. So this level right here was prominent. We had a reaction here, so meaning this is our last level of resistance before price broke above. So we drew that out right here. So down near when price comes back to here, we can look for a bearish reaction or a bullish reaction. What does that look like? I'm about to show you.
Okay. I think I'm almost there. I think I'm almost there because the last, if you go to the left, on your left,
Here.
that was your last, how do you say it? No, left, to the left. Yeah, that was your last, how do you say it?
That was just my last support level before price
Yeah,
broke to the
your
upside.
last, yeah. So you start where your last support level is, and this level where you are now, you just mark it precise, right?
Yeah.
From there, okay. The rest it doesn't matter on the right side. How
Yeah.
it's all
Yeah, the
right.
rest doesn't matter. Yeah. You always want to
So
mark
yeah,
you always want to mark from left to right.
yeah, that
Oh,
was more my concern about the from the left side because now you mark it precise. So that was like how I'm gonna know to mark it precise, you know?
yeah.
Okay.
So now that we understand that we have a range right here, we would have marked this level up. It looks ugly right here, but we know exactly why we marked it up based on the 4 hour,
Yeah,
right?
it's from the 4 hour, yes.
Exactly. So when price got back to here, you could have been anticipating sales.
Right.
Could have had a stop limit, meaning when price is buying up to here, you could have had a limit right here for sales. Or once price broke back above, you could have had a limit for buys.
Mm-hmm.
Boom. And you would have caught TP for sales and TP for buys. Unless you're trying to take this all the way crazy far. But I mean, this is a good trade. This is a very simple trade. And the reason I say that is because if you would have took it here, why I say exactly at that region, because it's a limit. You have a limit there. So as soon as you took that trade, stop loss is here. Have the stop loss at the tip of this range. That's what I would say.
Mm-hmm.
Stop
Mm-hmm.
loss at the tip of the range. Your TP should just be a 1 to 3,
1, 2, 3. All right.
which is right about approximately right about here. That's your 1 to 3.
Okay.
You caught the whole move. Simple. Now, if price broke above and you didn't take that sell, you didn't take it, but you wanted to take buys and price broke back above, you can take buys here. If you wanted to take buys here, okay, cool. I will honestly take buys. Honest, I swear to goodness, take buys at the 50%. This is the 50% of this range. It might not come exactly right to here. So if you take it at the 50%, it allows your stop losses to be safer.
Understand. But you take your entry on the bullish candle there when it's
Uh,
reached
I'll
50%
take my
or
I'll
when
take
after the pullback.
no, I'll take my entry right here, exactly where it started.
When the pullback comes back down.
Yeah.
Okay, okay.
So you'll stop taking a trade like that. Your stop loss realistically is going to be here, targeting a 1 to 3. So let's make it that.
Yeah. Man, this is
Oh,
really exciting to watch.
targeting a 1 to 3 restore. So just using price action, and you can take trades off of this level multiple times. Multiple times. Why?
Yeah.
Because look,
I see.
it came
I
back to it again in ball.
I can see it, man.
So boom, that's one that's one example. Now let's go to the 4 hour. That chart. Now we see that we have levels. What are our previous levels of support? I mean, of resistance, of major resistance. We have major resistance in these regions. You know what I'm saying? Like all these regions right here. But how do we mark it out effectively to know true region. What you do is you figure out what is the highest point of this resistance. When I say resistance, I mean all of this.
Mm-hmm. Yeah.
How do
The
I
whole
find out
story.
how do I mark it up perfectly? You
Yeah.
find the highest point of this resistance. So the highest area of this major resistance is this right here.
That's the week there. Yeah.
Right? So you
Mm-hmm.
look to the left, you find who is responsible for stopping this there. Look to the left, you look to the left, and you're like, wait a minute, these levels. Meaning, if I go ahead and mark out these levels right here, all the way down, I should be able to catch the whole move. Boom.
Right.
Now you can draw this out. You always want to figure out, there's always a reason why price stops, and it's always going to show you on the left. So you figure out who was responsible, what was the last line of defense, allow the price to go whatever direction, and you mark
Mm-hmm.
that out. That's what you mark out. So if you would have marked this out, you wouldn't have known in the meantime, but later on, you wouldn't have known all through right here, you wouldn't have known. But over here, you would have. Now I'm gonna show you this. You know that this is a pivotal area. You know it is. So if
Mm-hmm.
you would have tried to take sales from here, yes, you would have lost. I would have lost this trade. I would have tried to take sales right here. Now guess what? We lost that one. You know you can always take buys back down in that range because you know price is going to either flip. It's either going to use it as support or it's going to use it as resistance. So if you use these levels as support, you can buy. Use them as resistance correctly, you can sell. If you use these levels as support, you can buy. Market is always in supply and demand. You have to understand where the buyers and where the sellers take control. There's always a medium in price. There's always a level where buyers and sellers have a fight to decide whose territories is whose territory.
Yeah.
We know
But
that this region is a seller zone, so we know that we need to take sales there. We took sales there because why? Are mechanical. That's what we do. Then if price breaks back above, you can take more buys. So if you see right here, you could have took buys here, here, anywhere in this region. Me personally, I'm taking buys. If I'm taking buys, I'm taking it at the 50%. Meaning, I'm taking buys right here. As soon as it taps, it breaks above and it taps. With my stop loss decently below the region. Targeting just a 1, 2, 3. And for the people that's watching this video on YouTube or whatnot, this is this is really good for y'all because this is also a way that you can mechanically trade without importing our Fibonacci, main way that I trade. You know what I'm saying? So if you
yeah,
can't get,
I was looking and I was like, hey, we didn't use the FIP.
yeah, I know. I'm showing you price action right now.
Yeah.
I'm teaching you how it works.
Okay, but you tell me that if you took a sell here, you have been lost. You
Yeah,
lost it.
yeah.
So the region you just mark out is for sellers, right?
Yeah, it's a seller's territory until we break above. Because if we break above it, then it's buyer's support.
Okay, so we broke above it. Yeah. And that's the indication that the market, the buyers are in, right? Or how can I?
The buyers took control.
Okay. So at this moment, because the region is for is a seller's region, and buyers come in, broke it, come back with a pullback, sellers, they want to break it again, but fail. And on the 50%, you take your entry for buys because it didn't close below the range, right?
Correct. Exactly. You pretty much
Okay.
got it. Yeah.
Okay. And what if the price was below the range? Sellers.
Like
When
what if
sellers broke back again.
then they just go back again?
So when sellers broke down to your stop loss where it is now and comes back up to the 50%, that means you're gonna sell, right? Or how can I see?
Price if price does this,
Yeah,
comes back up. Am
yeah,
I gonna sell right here? Yes. If that's what you're asking, yeah.
yeah. That was what I was asking. Sorry, that was
Exactly.
yeah, that was
Yeah,
what
you
I.
got it. Yeah, you understand. Yeah, you got it perfectly. Exactly. Because I know that this is a pivotal area where price is going to continue to reject. Exactly.
Okay,
Exactly.
I'm trying to follow it. I'm trying to follow it. But
Yeah, you
this
got
is
it down
really
pat.
fun.
Yeah, you good.
This is really fun, man. I like it.
Sure. So boom, you understand that. So you understand pivotal zones. That's good. So all right, that's good to know.
No,
Okay.
not so fast, eh?
Yeah,
I'm
no,
trying
you
to
good. You
understand it, but
got
I
it.
need to practice more.
Yeah, you good. You don't got to learn everything
Okay.
at once.
Okay. No, no, no.
So then
Uh,
here's the thing. We try to find regions inside of regions that touch regions. What do I mean by that? Something like this. It might be crazy, but I can already see where it's at. And that level is right here. I'm about to explain why I marked this out. Okay. I'm gonna tell you
how do
why.
you see that?
Why
How
did
do
I
you
mark
see
this
that?
out? Is because
Because,
I look right here and I see where before I mark it out, I'm gonna show you why. Like I said, there's a reason why price stops at a specific level every time, and you got to figure it out, and you have to look to the left. So we're starting from the right, going to the left. So price stopped here, stopped here, stopped here. Okay. Go over some more. Stopped here. Okay. Stopped here. Okay.
mm-hmm.
Stopped here. Okay. Stopped. Okay. And you just see where, and it's okay, bet. It looks like after right here, price got respected. Anything before it, prices continue to break through, break through, break through, break through, break through. So it looks like right here we had a breakthrough, retest, retest. So we mark out this and see how it lines up. I know it's going to be hard for you to do it now, but that just comes with experience. You'll be able to get it. Boom. And you
So
mark up you mark
this
up
was a
this.
little bit difficult,
It
but
is pretty.
we'll be
I don't
there.
want to say. I'm not gonna say anything's difficult. It just depends on the person.
Oh,
So we got a range here. So we once we mark this out, we now see. Wait, he was responsible for his stoppage, his stoppage, his stoppage, his stoppage, his stoppage, his stoppage, his stoppage. Then when you look at it and you go down to the 1 hour time frame, you're able to catch entries. For example, retest for buys, boom. Sales, entries, boom. Sell, entries, boom. Sell, entries, look at that, boom.
shit, man. It's a one
Last little
hour.
touch
That's
is
a big
sell,
move,
entry,
man.
boom. Buys right here, boom. Buys, you know what I'm saying? You wouldn't have known right here, but you would have seen it way later. This is what I'm saying to people. Pivotal zones are very, very important in the way that I trade. And the reason I'm saying this is because I'm about to wrap all of this up and show you that these zones are exactly like our Fibonacci. Our
Yeah,
Fibonacci works the same exact way, right? And I'm not going to explain it in this video because I'm going to post this video on YouTube. I don't want the world knowing about it, but I'm going to post most of this.
man.
Um,
This is going to be really big
yeah,
for sure.
this is good. It's for sure a good
This
video.
is going to be the new way to trade.
Yeah, no, I don't. Yeah, exactly. That's the thing. I don't want people to know exactly
Not
how I
yet,
trade.
but if you're going there, it will go fast. But we
Appreciate
need,
it.
yeah. But I understand you.
For sure. But these are our pivotal zones, and I'm showing you why we marked them out. So now, if we was like over here in price, right? Let's say we was over here.
Can you do a replay something or?
It doesn't let me. It doesn't let me. I gotta
Oh,
remove my stuff. Yeah.
yeah.
So now, for example, what's your first? We see that price is selling, we see that price is buying, and we see the shift in momentum. Where's that at? Right here. Now you look to the left. I mean, you start from the right, but then you're like, wait a minute, price keeps stopping here. Why? I say because of him. This guy. Ah. That's why this whole entire region.
Okay, 1 minute. Price comes back, price comes down, then
So
price goes up. You put the line there, the straight line, and you go to the left, and you see this big wick. How did you come and say this wick on the left? is the
Because look, I'm gonna
cost,
show you. I'm gonna show you. I see that price is continuing to stop here. Stop here. Stop here. Stop
right?
here.
Stop
Stop
there.
here.
Yeah. Yeah.
Almost here. Stop here. Stop here. Cool. Stop
Hmm.
here. Little range here. I'm like, wait a minute. This is the last level of, of support slash resistance that we
Yeah.
had before price changed in direction.
Right.
Meaning
Okay. Okay.
this
I'm
was the
following.
last,
Yeah.
this was the farthest level. So we went ahead and said, bet he's responsible for it.
All right. I'm following it. Okay. Okay.
Boom. And
Yes.
now, and then from there, what do we do? How do we figure out the range? We just look at the range. And honestly, I just mark it. I wouldn't mark up this whole entire thing like this, but no, we don't want to do that. So what I do is I go like this. I mark out the whole entire wickedest candle. So I'm going to show you how I do it. I mark out the entire wickedest candle,
Mm-hmm.
boom, to find the 50%. And the 50% and lower is right here. So this will be the range I mark out. This is what I delete.
Oh,
And I
okay.
take
Okay.
buys,
Yeah.
everything inside of that range and sells. You see how
Man.
each tap is perfect. Tap, 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 over and over
Yeah.
and over. Same thing
How
over
about the
here.
cell? How about the big cell there?
This one,
Yeah. No, on the left. On the
this one.
left. This cell. Yeah. Can you explain why it happened? Because price was bearish actually, right?
The price is bearish. So, okay, so for example, let's see.
A little bit bullish there. Then price goes
So
bearish.
it might be because of something like this. You have something called liquidity. I swept. This is the biggest and last low of the entire shift
Right.
before price shifted up to the upside. That was one of the last ones. So
Mm-hmm.
with that being said, price swept that liquidity. This is the only example I can give because we never know why price did what it did. We just have to mark out who's responsible for it. So
Yeah.
price came to these regions, made it a support, swept the regions, and then started to develop bullish price action with inside of that. So inside of this range, we can draw out a bullish trend line, something like this. Boom. Right? Just for an example. Let's just make it
Mm-hmm.
like this. A bullish trend line. Boom. We have our bullish trend line. Price comes back inside this level of resistance that it continues to retest. Would have got your entry according to everywhere else had that is exact like the literal level that it keeps on rejecting from. You're taking a sell from your 50% right here with a decent stop loss, targeting whatever you want to target. I say always a 1 to 3. Target trade TP. You would have did the same thing here. Would did the same thing at every you would do the same thing at every single spot, no matter what. Let's see. 1 to 3. You want to make sure you're 1 to 3 is at least to that low. You want to take it too far. You would have did it every time price came there.
That's it. Every time price come back to the 50%.
Every time. Yes, every time. Then when price was above, you want to take buys every time. Price comes to that 50%. Buys every on time with a decent stop loss. Targeting a 1 to 3. This is going to be such a good YouTube video for the people that watch this video to understand the price action. Boom. You will want to hit that. This one hit TP for sure. You will want to do it again right here. Boom. You would want to do it again right here.
Man,
Boom.
you can do this the whole day.
You want to do it again right here.
Oh, man.
Boom. And you would have lost it, right?
Mm-hmm.
And once price flipped over, you would have won it. Boom, boom, boom. It's the same
So
thing.
actually, you took back your loss.
No, my loss is right here.
Yeah, because you hit stop loss and then you go back
Oh
to
yeah,
sell.
yeah, yeah. No, that's the
You
thing. I didn't even really lose because I hit a 1 to 3 right here, a 1 to 3 right here, 1 to 3 right here. That's nine times the amount of this one loss.
yeah, and then you go back to sales and actually you didn't lose anything.
Exactly. And boom, you just continue to do that
Mhm.
over and over and over and over. That's
Yeah.
on the bigger range. Now with inside of a smaller range, you do the same thing right here. Sales, 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 sales. You know what I'm saying? You just do it over buys, buys. eyes. You do the same daggone thing. So yeah, I just wanted to break that down real quick. This video is going to be for YouTube. I don't want to give them too much sauce, but this video right here is amazing. And yeah.
I know, man. I know. Shit. This